Hello, everybody. Good morning if you are in Asia, and good afternoon if you are on the West Coast of the US. Good evening if you're on the East Coast of the US. And I hope you have a pillow and some coffee if you're in Europe. My name is Mary Grady, and I'm the president and CEO of ERT. This webinar is an overview of STEPS, the standard for the transformation of the electric power sector. During the webinar, I'll cover what STEPS is, the problem it's designed to address, the requirements for crediting, and how you can submit comments during the open public comment period. So first, a few logistics. To ask a question, you type it into the Q&A box at the bottom of the webinar pane. You can submit questions at any time during the presentation. You don't need to wait, and we will address as many as we can today after the presentation is finished. And then any questions that we don't get to will be covered in the written responses that we publish after the public comment period closes. Also, just to confirm, this webinar is being recorded, and the recording will be posted on our website, stepsclimate.org. So first, a little bit about us. STEPS was developed by Environmental Resources Trust, or ERT, a wholly owned nonprofit subsidiary of Winrock International. ERT was founded in 1996 as the world's first private greenhouse gas registry, and it joined Winrock in 2008. ERT operates ACR, formerly American Carbon Registry, an independent crediting program operating in compliance carbon markets such as California, Washington, and ICAO. We also operate ART, a jurisdictional crediting program for reducing emissions from deforestation and forest degradation, also known in UNFCCC lingo as REDD+. And ART also operates in the ICAO market and voluntary markets. So although STEPS is a new standard, it draws on 3 decades of experience designing and operating crediting programs, including at the sectoral level. So this model of combining ART's jurisdictional credit supply with aggregated demand at scale from the LEAF Coalition by sovereign and corporate credit buyers served as the inspiration for the Energy Transition Accelerator launched at COP27, which is now known as the Kinetic Coalition. The aim was to bring private capital at scale through carbon markets to help finance the just energy transition for emerging and developing countries on an accelerated timeline. ERT was selected by the ETA partners to develop a first-of-a-kind sectoral crediting approach for the electric power sector, which is now what we call STEPS. STEPS has been developed by a team at ERT, and we've counted on recognized experts in developing the standard, including advisors from the International Energy Agency, the Electric Power Research Institute, and the World Bank Group. We've counted on economics, finance, and mathematics professors from Georgetown University and former government employees of the Energy Information Administration and the Council on Environmental Quality, all of whom provided input, guidance, and technical and policy analysis to inform the crediting approach and other aspects of the standard. In addition to these expert advisors, ERT received valuable feedback from key stakeholders, including the ETA partners and members of the high-level consultative group. The technical depth of the standard reflects the collective input of everyone that I've just mentioned. So the challenge that we are trying to address, what we're looking at doing is how to incentivize rapid grid-wide decarbonization of the electric power sector while simultaneously addressing energy access and energy security. The power sector is among the largest sources of emissions, and decarbonizing it at the necessary pace requires substantial investment. Many jurisdictions where this matters most face high capital cost and competing economic development priorities. So STEPS is actually a solution. It provides a rigorous framework to mobilize capital through carbon markets using a sectoral, performance-based crediting standard designed to incentivize earlier and deeper electric sector emission reductions and to accelerate the time to peak emissions. This goal has been the North Star of our work to develop the crediting standard. In addition to this, 4 goals guided the design of our approach. The first is that the crediting standard will enable comprehensive, long-term structural transformation of the electric sector through shifts in policies and infrastructure. The second is that we're aligned with the Paris Agreement to produce a high-integrity crediting system consistent with best practices for MRV and safeguards, which will catalyze large-scale investment, revenue, and resources needed to achieve a clean energy transition. Third, the crediting system will be based on an ambitious but achievable emissions performance standard, or crediting level, that accelerates the transition to lower electric sector emissions aligned with Paris Agreement temperature targets. It's important that this also needs to still be achievable for the participant countries. And this is a balance that we'll return to when we discuss the index. And fourth, we aim to support countries in meeting their NDCs for the power sector and doing so faster than would otherwise occur. So the key features of our approach are demonstrated on this next slide, which Katie is it's still having a hard time coming through, so we'll just give it a second. The overarching theory of change. No, we went one past it, Katie. There we go, we got it. So the overarching theory of change is that a sectoral approach incentivizes structural, policy, and regulatory changes to support sector-wide decarbonization and lead to lasting long-term results. STEPS requires measurement, monitoring, and reporting of emissions performance at the system level, including all grid-connected power plants, captive plants that serve a single industrial facility, distributed renewable generation, as well as emissions associated with electricity imports and exports. Because it operates at the sector level, it's designed to incentivize systemic change, such as the economic, policy, and regulatory shifts that decarbonize a grid. So there are several advantages to this approach. First, by measuring actual emissions performance at the grid level, STEPS directly addresses two technical risks that affect project or facility level crediting. The first is emissions leakage, where emission reductions from one activity are displaced by emission increases elsewhere in the system. And the second is overcrediting against a hypothetical facility baseline. The second advantage is that because actual emissions performance is what is being measured, STEPS allows for a broad range of intentional actions to contribute to reducing emissions rather than prescribing specific technology interventions. This offers countries the flexibility to make their own decisions on how to address the energy transition while also addressing energy security and energy access. Third, the approach is intended to help finance both infrastructure and the cost of the just energy transition. And finally, it creates incentives to improve power sector emissions measurement and reporting within the context of the enhanced transparency framework of the Paris Agreement. So this point that countries make their own choices follows directly, and it is important enough to state on its own. Again, under STEPS, countries make their own choices about how to accelerate decarbonization. The standard sets the emissions performance level for crediting and the rules for measuring it. It does not dictate how a country gets there. A country may implement any combination of carbon pricing policies, such as cap and trade or carbon tax, regulatory and operational changes to improve efficiency, including auctions and dispatch priority, in addition to renewable energy incentives such as feed-in tariffs, long-term PPAs, and fast-track permitting. Governments may offer fiscal incentives for early retirement of coal-fired power plants and for CCS, and they may decide to build out the grid infrastructure and energy storage to accommodate renewable energy. So this slide maps the design logic from principles on the left to the features in the middle and the intended outcomes on the right. So let me just go through these by taking the four principles in turn. The first is that STEPS should be transformative. The corresponding feature are sectoral design and the system level accounting aligned with UNFCCC reporting. The intended outcome is that it incentivizes decarbonization across the sector alongside growing electrification, and it works for both voluntary and compliance carbon markets. The second principle is standardization. The key features are a Paris-aligned global emissions decline rate, fixed crediting periods to 2050, a standardized process to define country-specific crediting thresholds, and standardized sectoral MRV. The outcome is that it addresses a significant gap in the market and captures national differences without the need for individually negotiated baselines. The third principle is that it should be adaptive to national context. This is delivered through the Custom Steps Index that incorporates a range of factors that are highly correlated to the ability to decarbonize, allowing for the adaptation of the crediting threshold for each country. The outcome is equitable access for countries across a range of income levels and stages of electricity system development, directing incentives where the finance is needed most. And the fourth is that it should be dynamic. The features are 5-year crediting periods, scheduled index updates, and reassessment of the graduation factor over time. The outcome is that the standard can update its thresholds as the transition accelerates, as technology changes, and as performance data accumulates. I'll go into these features in more depth. But first, let me start with eligibility. Any national government or their authorized designee is eligible to participate in STEPS, provided the electric power sector is covered in their NDC. A specific sectoral target is not required, but the NDC must include emissions from the electric generation sector. To be eligible, participants must also submit an energy transition plan with just transition elements, and they must commit to 10 years of participation, which covers 2 crediting periods. The energy transition plan may be the same as or include parts of the participant's NDC, just energy transition partnership agreement, national resource management plan, or other plans that governments may have. The plan should include new and ongoing activities and initiatives to reduce electric power sector emissions, including the timeline for implementation, the associated finance and investment needs, if known, and associated emission reductions and milestone dates. The plan must also detail the just transition elements such as labor and workforce development, social protection and safety nets, and energy access and affordability. Next, I'm going to cover the boundary requirements. So the boundary defines what counts as the electric power sector for STEPS MRV purposes, what generation facilities and what emissions go into the calculation for credits. There are 4 categories included in the boundary. First, all grid-connected generation, regardless of fuel type, technology, or size, is included in the scope. Second, off-grid captive industrial generation, installations of 1 megawatt or greater that generate power for their own use, for example, at an industrial site, are also included. Third, off-grid distributed generation installations below 1 megawatt are included. These are tracked at an aggregate level rather than individually. And fourth, imports and exports of electricity are accounted for in both the generation and the emissions totals so that they are properly reflected in the sector's emissions rate. And again, the purpose of a complete boundary is to ensure the emissions rate reflects the whole sector, which is central to the crediting mechanism and the theory of change. So keeping in mind that the goal of the standard is to incentivize deeper and faster emission reductions and to accelerate the transition to peak emissions, we have focused our approach on emission reductions that go beyond a continuously declining Paris Agreement temperature goal aligned performance standard or crediting baseline, which is what you see in this slide. Credits are issued for verified grid emissions rate performance that surpasses the country-specific performance standard. So setting the country-specific performance standard is central to the crediting approach. So we're going to spend the next several slides on this. So STEPS is performance-based, and in any crediting period, a country earns credits only when its annual power sector emissions rate is verified to surpass the performance standard baseline for that year. Setting the performance standard baseline happens in 3 parts. Part 1 is establishing the global sectoral target, which we have set as an 80% reduction in the sector's emissions rate by the end of 2050, measured against the country's starting period emissions rate. Part 2 adjusts that global target to each country's circumstances through the STEPS index. And Part 3 confirms the results are beyond business as usual. Next slide. So let's take Part 1 in detail. The target is an 80% reduction in the electric sector emissions by the end of 2050 against the starting period emissions rate. The 80% reduction is distributed across the 5 crediting periods in progressively steepening steps. The targets for the first crediting period will be published with the standard, and each subsequent period's targets are reconfirmed every 5 years ahead of the beginning of the new crediting period. So here is again that global trajectory as a set of numbers. The table shows each of the 5 crediting periods, the annual rate of reduction in the emissions rate, and the cumulative reduction. In the first period, 2026 to 2030, the required annual reduction is 2.4%. It steepens after that to 2.8% per year in the second period, 3.2% in the third, 3.6% in the fourth, and 4% in the fifth period. So cumulatively, that builds from 12% in the first crediting period and reaches a full 80% by 2050. This is the same global starting point for every country. Part 2 is where it gets tailored to reflect country-specific circumstances. So this is Part 2, the STEPS index, and it's the heart of how we adjust the decline rate to national circumstances. The index is built on 3 pillars, each composed of their own indicators, all of which are drawn from public data sets and identified through a structured evaluation process. Each country gets an index score, a weighted combination of its 3 pillar scores. That score is divided by 50 to give an index adjustment factor, and that factor is what converts the global performance standard into a country-specific performance standard. Pillar 1 is renewable energy potential, weighted at 35%. This considers 3 things: the current system profile, meaning present renewable share and recent growth; the resource endowment, meaning the technical potential of solar, wind, and hydro; and the pipeline, meaning the renewable energy capacity already under construction. Pillar 2 is fossil fuel dependence, weighted at 25%. The question here is, how locked in is this country to fossil generation? This includes the system profile, fossil share of generation, the recent trend, and the age of the fleet. It also looks at economic reliance, meaning the coal and gas rents as a share of GDP, and it looks at the pipeline, which is the fossil capacity under construction. Pillar 3 is transition capacity, weighted at 40%. The question here is, does this country have the capacity to decarbonize its electric power sector? This pillar spans 5 areas: the system profile, such as demand growth and electricity access; infrastructure such as grid loss, market structure, and generation diversity; economic factors such as GDP per capita and the cost of capital for solar; policy such as carbon pricing and the World Bank's RISE score; and equity, drawing on measures like the Human Development Index and climate vulnerability. Institutional readiness is the binding constraint on how fast a country can transition, which is why this pillar carries the highest weight. All of the underlying indicators and data sources are documented in the standard, along with the formulas to calculate the individual country index scores. These scores will be maintained by ERT. So this slide shows how the index score becomes an adjusted target. The index adjustment factor is the country's index score divided by 50. With 50 as the midpoint, a country scoring exactly 50 utilizes the global standard unchanged. The index adjusts the steepness of the global performance standard either up or down. So in the example shown here, a country scoring just under 50, which is a country scoring just under 50, has a required annual decline rate coming in just under the global rate. So this chart shows the example from the previous slide. The dashed blue line represents the global performance standard, while the solid orange line shows the example country performance standard. Note that the index score for each country is recalculated at the end of each crediting period for the next crediting period to account for relevant changes over time. So this slide shows an example of a country whose adjustment factor produces a steeper performance standard. Set side by side with the previous example, this is the index at work, steepening the performance baseline for crediting for a country with stronger conditions for decarbonization, while adjusting the baseline upwards for a country that faces greater constraints. This slide depicts an example of how a country with a 100 terawatt hour system in 2025, growing at 4% a year, could improve electric power sector emissions performance to earn STEPS credits. The starting emissions rate is the minimum emission reduction from 2023 to 2025. The country's specific performance standard, or crediting baseline, is the solid green step. This is a percentage of reduction from that started period emissions rate. The system-wide measured emissions performance must be below that baseline to earn credits. When the country's actual measures emissions rate performance, represented by the dotted orange line, comes in below that baseline, the gap represents the emission reductions. So you can see the crediting where the arrows are depicting the gap between the crediting baseline and the actual performance is where the jurisdiction would be generating STEPS credits. So the third part of the performance standard is the check that the country's standard, the country's specific performance standard, is beyond business as usual. We apply two complementary tests, and a country's standard has to pass both to be eligible for crediting. One test looks backward and one looks forward. The first test is the historic trends test. We take the country's index-adjusted required rate of decline and compare it against the change actually observed in its emissions rate over the past 3, 5, and 10 years. If the standard requires a steeper decline than the country has been achieving on its own, that's evidence that it is beyond business as usual. The second test is the capacity pipeline test, which looks forward. Using Global Energy Monitor dataset complemented by country disclosures, we estimate how much the country's emissions rate would change over the crediting period from the generation already in its pipeline, and we compare that to the performance standard. This is the test that highlights cases in which a country's generation pipeline will already result in emission reductions that exceed the STEPS performance standard, in which case either the country is not eligible for that crediting period, or it may elect to take on a higher emission reduction target. So how does crediting work? Once gross emission reductions are calculated, several adjustments are applied to calculate the volume that will be issued. First, we withhold 20% of verified credits for deposit into the performance reserve, which is designed to incentivize long-term participation. As countries continue STEPS MRV, we release 20% of credits held in the reserve at each subsequent verification. And if a participant withdraws from STEPS during the 10-year commitment period, it will forfeit all the credits that are held in the performance reserve. Second, to prevent double counting, we deduct for any verified emission reduction credits from project-level activities that are inside the STEPS boundary. Third, we apply a coal adjustment factor for new unabated coal plants equal to the total emissions from that new plant. A participant can avoid the deduction by retiring twice as much existing coal that is less than 30 years old. So a new 500 megawatt coal plant would have to retire at least 1,000 megawatts of younger coal capacity. And fourth, we apply an uncertainty deduction, which accounts for measurement uncertainty in the conservative direction. So this slide brings all of those pieces together into the crediting formula. We start with gross emission reductions, the gap between the crediting baseline and the actual emissions rate, multiplied by actual generation. From that, we subtract the uncertainty deduction and the coal adjustment factor. We apply the performance reserve withholding, and we subtract any project-level deductions for activities already credited elsewhere. What's left after independent verification and ERT's acceptance is the net volume of STEPS credits that will be issued to the participants' registry account. So also unique to STEPS is that the environmental and social safeguards are embedded as a requirement in the standard. They are modeled on the UNFCCC Cancun safeguards, which were agreed among all the governments and indigenous peoples and local communities as appropriate for national level activities. The safeguards are applicable to government-led actions as detailed in the Energy Transition Plan, including the just transition elements. Each safeguard establishes the principles participants are expected to uphold, and each indicator defines the process by which participants can demonstrate conformance with the safeguards. 10 safeguards encompass consistency with ratified relevant international conventions, effective stakeholder engagement processes, and access to grievance redress mechanisms, among other key safeguard tenets. Conformance with the safeguards is verified alongside emissions performance. Underpinning all of this is measurement, monitoring, reporting, and verification. One of the design aims that STEPS is strengthening a country's own emissions measurement. It aligns with the reporting templates countries already use, and it gives them clearer visibility into their power sector emissions. At the center of this is the Enhanced Energy Sector Balance, the country's annual ledger of energy flows in the electricity sector. It's built on the standard international frameworks, IRES and the IEA and Eurostat energy balance structure, so that it uses the same accounting backbone the National Statistics Office already relies on. Everything goes into it: fuel inputs by type, gross and net generation, the plant's own electricity use, imports and exports, and losses. The emissions calculation itself is straightforward in principle. The starting point is how much of each fuel was burned. Each fuel has two key properties: its calorific value, how much energy it carries, and its emissions factor, how much CO2 it releases per unit of energy. Multiply the fuel quantity by those, apply an oxidation factor, and you have the emissions from that fuel. Do that across every fuel and every installation, sum it up, and you have the sector's emissions for the year. The level of rigor scales with the size of the producer. Smaller and mid-tier producers use standard reference values, the IPCC default calorific values, and emissions factors. The largest producers can go further, using a mass balance method based on the actual measured carbon content of their fuel from accredited laboratory analyses, so that their number reflects what they actually burned rather than a default average. On verification, the greenhouse gas accounting follows the principles of ISO 14064, the international standard for quantifying and report emissions, which means relevance, completeness, consistency, accuracy, transparency, and conservativeness are all required. Validation and verification are carried out by entities duly accredited under the International Accreditation Forum. So the process for joining STEPS is straightforward. Eligible governments first submit the tree's concept to ERT. The concept includes describing eligibility, the status and timing for completing the Energy Transition Plan, a description of the available emissions data sources and monitoring systems, and an overview of how safeguards will be addressed. Once that's accepted by ERT, the country is considered listed. The STEPS registration document and the initial monitoring report must be submitted within 18 months of the concept. At this stage, the participant submits its full energy transition plan, including just transition elements, and the capacity pipeline business as usual test is confirmed. On acceptance by ERT, the country is registered and is ready to start verification by an accredited validation and verification body. It's important to note that if a verifier is contracted in advance, the validation and verification can then begin immediately. And the validation and verification process is expected to take anywhere between 9 and 18 months, depending on a variety of factors. As you all are aware, the draft standard is open for public comment through July 1st. It is available on our website, stepsclimate.org. Please feel free to send us your feedback to the email, and all the directions are on the website. We will be reviewing all comments that we receive, and we will publish written responses to all of the comments along with a summary of changes that we make to steps as a result when we publish the standard after the public comment period. So I will stop there and turn to your questions, and we'll work through as many as we can. Let me turn to those now. All right, so let's see. We have a question about what kinds of activities will STEPS incentivize and what activities are eligible under the standard. Ben, can you help us with that one?
Sure. Thanks so much, Mary. So STEPS is a performance-based sectoral standard. It isn't tied to specific project, any specific project or intervention. Any activity that lowers the power sector's emissions rate can contribute to crediting, including deploying renewables, retiring or reducing dispatch of fossil generation, grid infrastructure improvements, demand side efficiency, energy storage, carbon capture, use and storage. Because we credit the sector-wide performance rather than prescribing actions, the design is meant to incentivize broader structural and policy changes that decarbonize a grid, not just single facilities or activities. There are, however, certain activities that are ineligible under STEPS. For example, new hydro greater than 25 megawatts of installed capacity can't contribute to the improved performance unless it is certified to the International Hydropower Association's hydropower sustainability standard, and new biomass has to be sourced under the RSB certification. So there are some guardrails in terms of the types of clean energy that would count
Great,
towards
thank
the
you.
reductions.
There are a couple related questions on crediting periods and vintages. So maybe Katie, we can take both of these all in one go. So the first one is about defining the crediting periods and explaining why they're fixed. And the second one is about the earliest steps vintage credits.
Sure. Yeah, so there are five fixed 5-year periods starting from 2026, going out all the way to 2050. The first crediting period runs from 2026 to 2030, and so on with the fifth crediting period going from 2046 to 2050. The required annual performance standard decline gets steeper each period, as Mary mentioned, starting at 2.4% per year in the first crediting period, going up to 4% a year in the final one. And we've decided to fix them to calendar dates rather than join dates to incentivize early action from countries and to promote integrity so that everybody's on the same Paris-aligned trajectory with the same 2050 endpoint, and no one gets an easier baseline by joining later. And then to the question about what's the earliest steps vintage, 2026 would be the earliest creditable vintage, since that's when the first steps crediting period begins. And a participant can reach back up to 2 years before its concept is accepted, provided that the MRV and safeguards requirements are met for each year. So I believe in the standard, we provided an example of a 2028 concept that looks back and is able to claim starting in 2026.
Great. So there's also a question about whether the standard will be eligible under the Paris Agreement, Article 6.2 for cooperation and ITMOs. I can answer that one. So indeed, Paris alignment is core to the design of STEPS, and the standard includes requirements to avoid double counting including a letter of authorization process, which is aligned with Article 6.2 and covers the authorization of transfers and requirements for corresponding adjustments. Both of those things are the responsibility of participating governments, although we will obviously check those things and label any authorized and adjusted credits as such on the registry. We're also Paris aligned in the baseline trajectory, the requirements to be below business as usual, the requirements to avoid emissions leakage by focusing at the sectoral level. So because of this, we intend for the credits that will be generated under STEPS to attract carbon market finance through both voluntary and compliance markets. So we would expect that corporates that have net zero commitments would be interested in STEPS credits, as well as sovereign governments that need to transfer units to meet their NDCs under 6.2. And we have also already submitted the standard to ICAO for eligibility to generate credits for the Carbon Reduction and Offsetting Scheme for International Aviation, CORSIA. Okay. So I'm not seeing any other questions coming in. We'll give it another second here in case somebody has something they want to ask. If not, we thank you for your participation. Please feel free to submit comments once you've had a chance to digest all of this. And we look forward to answering those questions and comments when we review STEPS for publication. Thank you very much.